Alright, I've been reading about SoFi technology to basically see if it's a good opportunity to invest my money in, and if you stick for another couple of minutes, I'll try to summarize it for you. SoFi is trying to disrupt the banking industry. They claim to be a one-stop shop for all financial services for their members to borrow, save, spend, invest, and also protect their money. And although SoFi stock has gained 108% this year alone, it's nearly 63% down from its all-time high back in January 2021. At the current stock price, the company has a market cap of $9 billion. They have around $3.3 billion in cash and $6.2 billion worth of debt, bringing the enterprise value, or basically the cost to acquire SoFi, to $11.9 billion. The company brought in $1.9 billion in sales or revenue in the past 12 months, and $1.2 billion of that remains after cost of sale, which is basically the operating income. However, after all expenses, the company has reported a loss of $429 million in net income. They also brought in an adjusted EBITDA of $98 million, up 121% year over year. Now that PE ratio doesn't make sense for companies that are losing money, we can see that the company is trading at 6.2 times its revenue. It looks a little bit expensive if you compare it to the median of the industry, but you also cannot forget that traditional banks and financial companies are not growing as much as SoFi does. And also, SoFi comes in 1.48 times its book value, which is basically the amount of equity left after subtracting all the liabilities from the assets. And almost 1.5 is not really expensive for a fast-growing company. The reason that price to book value is used for banks and other financial companies is that they're basically in a spread game. So the cost of funds and yields are around the same for all other banks and all other financial companies. And the price to book value is determined by how well they're able to maintain that spread, or basically how efficient they are in using their assets to create value. SoFi is also growing revenue at a solid rate. Until quarter 2 2023, the revenue growth hasn't come below 50%. For quarter 3, they came just below 40%, but it's still a year over year of 37 is a solid good growth. Interest revenue, which is one of the most important metrics for financial entities, tripled over the past year, standing just below $600 million. Deposits also doubled from $7 billion in December 2022 to $15.5 billion in quarter 3 2023. Comparing SoFi to some of its competitors, I found this cool chart at seekingalpha.com. We can see that SoFi is the best performing one over the past year. Although they're mainly based in the US and focus on the US, they recently expanded towards Hong Kong by the acquisition of 8 Limited, an investment business, and they're also gaining exposure to Mexico and Colombia by their acquisition of Galileo. Don't hold me on the pronunciation though. And they also expect to further develop into Latin America by their highly anticipated acquisition of Technisys. Another very important and very exciting news for SoFi is that they recently expanded their business into IPO underwritings. And aside from the fact that it opens up another stream of revenue for the company, it also improves their reputation as a serious player in the financial industry and not just a fintech startup. They were involved in Instacart IPO and also ARM IPO, and although I couldn't find exact figures, it's very typical to earn somewhere between 2 to 5 or even 6% of the total fund raised, which is a significant amount for SoFi. Another very interesting angle to hold SoFi and IPO business is that due to SoFi's access to retail investors, it allows them to offer IPO shares to retail clients, which can be very interesting for retail clients, retail investors, also helping SoFi gaining popularity and attracting loyal customers. Alright, a little bit earlier we talked about SoFi increasing their interest revenue a lot this year, but it had also a lot to do with the higher interest rate. And having another stream of income helps the company rely less on the performance of lending market. Another point that supports the bullish outlook of SoFi is the flow of institutional investors, especially hedge funds. During the second quarter of 2023, the amount of new hedge funds and new institutional investors owning a SoFi on their portfolio increased by around 6%. And those with half until 5% of their total fund invested in SoFi grew by around 13%. All right, and the last impressive figure for SoFi is the amount of members they've attracted over the past quarter. In the past quarter alone, they added over 700,000 new members, up 47% year over year to 6.9 million users. All right, thank you for watching all the way to the end of the video. Please let me know which stock you think I should cover next.